Bitcoin Informer. The price is either gonna go up or down. This chart strongly suggests down. Hee hee. We're gonna dive into this chart with the idea that there are 4 general options that could happen. We're gonna logically think about each, and specifically for the least likely options that Bitcoin doesn't enter this, let's take a look at what specifically you would need to see in shorter time frames in order for this to be avoided. Are you ready? Okay, let's go. And I won't sing at you anymore. This is your monthly bear market band. Typically, when you enter it, the bear market is about over. There is a trend that the bottom is hit in every bear market, and how it enters it behaves quite similarly as well. For example, price comes, I'm going to be over here now with my cursor. Price comes down to touch, you get repelled from it, and then 1, 2, 3, enter on the 4th red candle. That's how it works. Watch. Come down to it, you get repelled. See that green candle? You get repelled by it. Then 1, 2, 3, 4th red candle. You come down to it, you get repelled. 1, 2, 3, 4th candle. You had a green candle in the middle. That could happen this month. So this was essentially like a double repulsion, but it was the 4th candle that significantly entered this channel. Come down nearly to it, you get repelled. 1, 2, 3, 4th candle. Does Bitcoin have to behave that way? Is this some super rudimentary type of analysis? Absolutely. It's more of a structural and behavioral analysis. But here's the thing. In regards to whether it goes in or doesn't go in, there are really only 4 options. So let's take a look at that real quick. Option 1, the trend stays. The trend that Bitcoin goes into it on the 4th red candle. Or maybe not even 4th red candle. It just goes into it at some point in this, bear trend. And if you know anything about trends, the trend is your friend. So betting against the trend, even if it's a macro trend, I mean, it's not the safest bet. So therefore, most likely, from a statistical probability, does this have a 60% chance of happening? No. But potentially, it's something to the effect of 30%, and this might be 10%, right? And this might be 20%, and this might be, well, I guess I'm not doing the numbers right. This would have to be a little bit bigger. But it could be significantly less than 50%, but no other option provides... There you go. No other option is more statistically significant. I think, now, are these the exact statistics? No, but I think logically it is a safe assumption to say that among all 4 of these, this has the highest one statistical number, higher than this one, and this one. Not higher than these combined, but individually. That should be a safe assumption logically. Number 2, doesn't enter. I've been hunting, and I meant to make this video, upload this video by now, but I've really been looking for ways that Bitcoin doesn't enter and signs within the charts, but I can't find anything, folks. I can not find anything that says it doesn't enter. However, there is strong evidence that there could be a bounce here, maybe a month and a half, and then it rides it, then goes down. But if something like that were to happen, so you make a macro lower high, essentially, I mean, potentially even up to 55, 58, 60K, easily. It could happen. There is evidence of that, but there is no evidence that it won't come right back down and then go into the channel. It could get like a double bounce, kind of like this one. This had a pretty significant bounce. So, hits it, bounce, hits it again, bounces again, hits it, bounce, hits it, bounces again. That easily could happen because Bitcoin nowadays is behaving a little bit more like this section in Bitcoin's history as opposed to previous price action. Therefore, something similar to this absolutely could happen. You could get a double bounce. But the idea that it doesn't enter in general, there is nothing in the charts indicating it. I mean, I would almost give this something like this might be a single digits chance. I mean, it could be a 5% chance. that number 2 option, logically, out of all the things that could happen here, this could be single digits statistical chances. Another idea that it goes actually farther down than, I guess, these wicks below. This wick went 25% below. This wick went 15% below. This wick went 11% below. And all of those are ranging between about 20K down to about 17K if the trend were to stay, and the percentage below the band with which price wicks. So it doesn't necessarily stay down there for unless it was this bear market. It stayed down there, but these ones, it just wicked, right? It wicked and it wicked. It's indicating 20 to 17K. I don't see a whole lot of evidence in the chart either that it goes significantly farther down, but here's the thing. Global or U.S. Monetary policy could be that stimulator that gives that number 3 option, that it goes farther down. I think it gives it a better chance of happening than that it doesn't enter. Slightly. But those both might be single digits or barely into the 10% probability range, among these 4. If I can just make very loose assumptions, thinking loosely and generally, but logically about the 4 options here. All right. And then there is another option that it only goes halfway down, kind of tricks people out, and then continues and then bounces on it months later, and then recovers. In which all of these are just kind of like 3 waves essentially, and then it takes off somewhere in late 2022, similar to my previous video from yesterday, which you should check out. The thumbnail says the shocking shape of 2022. I put about 7 fractals on, show you all the different ways that this could pan out this calendar year, not going into 2023, but just the calendar year. And that idea going halfway down is one of them. It wicks down and then makes another hump and then kind of starts taking off here. That could happen. But the main idea of this bear market band is that it's definitely most likely that the trend stays and it ends up hitting this. Whether or not it bounces and goes to 50K first and then enters doesn't matter. It's extremely likely that is going to happen. Hopefully you can see this, and that is the main point of this. Now what we're going to do is we're going to dive into the smaller time frames and try to figure out, okay, if it's not going to go down, what are the signs that we're going to have to see first? And in those signs, though, they will be indistinguishable from forming a lower high on Bitcoin, which means it goes up to 50K, 45K, 55, 58K, doesn't matter. At that point, it would be indistinguishable, and then you'd simply be looking for higher lows. So let's take a look at the very first steps, though, that we need to see in order to either get a lower high or continuation to the upside to potentially continue a bull market. Before we jump into that, make sure you take this quick moment, help out your content creator, particularly returning viewers. You're the most important. Clicks for me. Thumbs up. Hit the thumbs up to help out the algo, and leave me a quick random comment down below. The month of January, the winner of my favorite random comment was whoever put soft eggs. For some reason, I liked that. In the month of December, it was somebody talking about his mom's stew. Let's see who can be the winner for this month. Help out the algo, do that for me. New folks, hit subscribe and make sure you hit the bell for all alerts, because a lot of my analyses are time sensitive. They're shorter term time frames, which we're going to dive into here as well. And let's get back into these charts. Follow me on Twitter, @ClosestRateOfThese2, for frequent Bitcoin and cryptocurrency updates. Turn on your camera and microphone and ask me questions directly and live up to 8 times a week. Links to the Discord community within the description section of all my videos. If online communities are not your thing, but you want exclusive content above and beyond what is offered for free on YouTube, hit the join button below this video and another video will pop up describing your options to you. Let's dive in to smaller time frames and let's take a look. I'm going to get rid of that indicator. I'm going to throw on the 89 EMA of the daily, and we're going to zoom way out and take a look here. The 89 typically during bear markets or during downtrends is it's a fairly good indicator of where lower highs are going to be formed once prices below this purple line, which is the daily 89. And a lot of times you'll come up to it, go down lower, try to get up to it, maybe make a higher low, maybe pop above it, but it's generally the playground, the general like front line type of deal of bear markets. And it's even more evident from the 2018 bear market. Pretty much all of your dead cat bounces went up to it, then turned around, and that is essentially what, when price leveled out and still couldn't get above it, it just tanked. When it just gave up, okay, we give up. The purple line wins. Let's go down and try it again. And then it's all going to zoom into this part after the capitulation of early 2019, late 2018. It tried to get above again, couldn't do it, rested on this origin line, and then finally got above. Used it as, I'm going to zoom way into this. Take a look at how it danced on this origin line, got above, couldn't handle it, came back to the origin line, got above it, used it as support, and then blasted off. This line is, I mean, it's kind of like one of the best bear market lines that you can have, and even this massive run during 2019 here, when it came below it, it wicked right up to it, tried to hold it, and then tanked below, hit an origin line, tried it again, couldn't stay above, hit an origin line again, wicked up to it, and then gave up. And so this point right here, let's zoom in, was the point in which it said, okay, I give up. Purple line wins, let's go below an origin line. And you can see that there is very strong agreement between purple line and origin line when they give up. When it gives up, it goes boom below an origin line. And then what does it do? It typically finds another origin line, in which it did here. And again, if newer folks, origin lines, I manually made these. I supply them to my tiers, all three tiers within the Discord community. They work pretty well. It doesn't make short-term time frame trading with leverage easier. Not necessarily, it doesn't necessarily make leverage trading much easier, but in terms of analysis and general direction and where things are going, it does get things right a very large percentage of the time. One thing going for us right here is that this purple 89 is a pretty far way away from here. And what this is indicating is that there is because Bitcoin is flirting with this origin line, and this is the master origin line, right? Again, I've covered this on my channel quite a bit. Zooming out, this origin line, I've made it lighter for a reason. I mean, it's the master one, right? All this. It's the one with the most action in all of Bitcoin price history. Therefore, if price can't get above it and stay above it, it's going to tank way below. And when that happens, it typically skips one origin line, hits the next. And, if that were to happen somewhere in March, that's exactly 20K, which is the previous market cycle top, right? That's simply how it behaves. But typically when it gives up an origin line, often in a bear market, oftentimes it wants to either come up and use this as resistance or get a large fake out above it and then roll over, and then the purple origin line says, and then it wicks back up, and then price gives up. Therefore, because of the distance of the purple line away from this origin line, it does indicate that there is a decent chance of a bounce. And in the first section of this video, I mentioned that there is evidence of a potential bounce. Well, this is one thing that I'm talking about. This does look like it might not follow the precise trend of the fourth red candle. What is a candle, Tim? The fourth red candle entering that bear market band. Although on a monthly chart, it looks like it's going to be this month, February. This could be the beginning of capitulation, folks. You better be ready. However, there is evidence in the chart that it might not be this month or even the next month. It could be a few months away before this origin line's broken and then price enters that band, right? However, it's still very statistically likely that it enters that band. Now, what are we going to have to see in order to tell, okay, are we going to come up to this? The first rule of thumb is before you get a pump of any sort, even this type of pump, you need a higher low on the daily RSI, which technically right now is trying to form. RSI, and again, the way that it would need to form it is it has to form it below this white moving EMA. The green is the RSI itself. It needs to form here, and then it could have a chance. This is in the makings. It is close, and if today closes down here, and then tomorrow ticks green, that would be your higher low below it. Typically, though, it likes to form it closer to a 45-degree angle. That's why I'm thinking today will be red, and so will tomorrow, per my short-term analysis yesterday, which you might want to check out if you missed it. It's the one with the thumbnail 1, 2, 3, and then the other video from yesterday is the shocking shape. So I made 2 videos yesterday, one long-term and one short-term. You might check those out. Those are the 2 description of the 2 thumbnails. And if Bitcoin can get that higher low, all right. And then the second step would be you need to get what you would see is you would get price above the daily 21 and hold it, similar to how it did here. It needs to get above. Did it get close to this line? Actually, it did kind of get close and just got rejected. But because see how far away it is now? Therefore, step 1 is price needs to get above and not just scream. It's not just going to keep going, folks. It's very, very unlikely that happens. It would probably come up, come test it, relax on it, or just come up and come back under it and rest on it, rest beside it, and then come up. But you're going to want to focus on this yellow line, which is the daily 21 EMA. And if you don't know how to set that up on your chart, I will link you to a TradingView tutorial that I made. It's 28 minutes at the end of this video. You should probably watch it if you don't know what an EMA is or how to set it up. And it's pretty dangerous playing around with crypto if you don't know how to set that kind of stuff up. Those are the things that we'd be looking for. And again, just remember though, although my videos as of recently have been indicating, hey, we're kind of looking for some, maybe not a higher low on price, but either whether or not Bitcoin makes a lower low, slightly lower low or not, that would still create a higher low on the daily RSI, in which in that case, if Bitcoin were to make a lower low on the closing daily and RSI made a higher low, that would be a strong strike of bullish divergence because this low got higher on RSI while price has a lower low. So lower low versus higher low equals bullish divergence. Listen, yeah, that's what that would be. But there's nothing saying that is what's going to happen, although we're going to be looking for it. I want to be very clear with that. On my channel, I've been talking about a lot, but there's no indication that that's what's going to happen. Watch. Check this out. Look at this. Look. Watch this. 69K top. Lower low, pump. 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 Kind of leveled out, pump. Lower low, pump. Lower low, pump. What could easily happen next? Lower low. Look at that. The whole way down. What's saying that that's not going to happen? Now, there are indications that this could be one where it levels out and tries to go on some type of rally. However, but what I just showed you here, lower low pump, lower low pump, lower low pump, does give a strong evidence that this month of February is the month where things start going into that band that we started off the video with. Lower low pump on the daily, right? Well, that's indicating this could be the month. There's very, very strong evidence in the chart saying that February is the month it goes down into here. Is it the month that will necessarily hit the bottom at 22K? Not necessarily. But it is the month where it gets trapped and stays in, and then perhaps in April hits the bottom. But this looks like the month where it's going to start its descent into it. Into the quicksand, grabs it. And if you've ever watched The Never Ending Story, the horse gets stuck in the quicksand, Atreyu or whatever his name was. I don't know if it was Atreyu or if that was the boy's name, whatever. He's yelling for his horse. Well, this monthly candle is the horse in The Never Ending Story potentially. It is sticking its foot in it, and it might get trapped. It might get trapped. And most of the evidence is suggesting that, I wouldn't say most, but there's more evidence suggesting that this is going to be the case than any other one case that I can find. And I want to not scare you with this information, but prepare you with this information. Not scare you, but prepare you. It could be this month. There's really nothing in the chart saying it won't be. And again, my channel's talked about potential higher low. That's what we're looking for, but it doesn't mean it has to happen. There's To the contrary, a lot of evidence suggesting against it. If you want to learn how to set up a chart with a TradingView tutorial, best 28 minutes that you can spend in crypto if you're new, click this video right here. If you want to see my long-term analysis from yesterday, shocking shape of 2022, click this video right here. And if you're new, make sure to subscribe with the circle in the middle before you get out of here. And you just got Tim of Ad Worldwide. Peace.